So welcome back to our Resilience Founder series. Today I'm talking to Saul Klein, which is a co-founder of a London-based venture capital fund, LocalGlobe. And they invest all around the world, but they are based here in London. He's now an investor, but before he was a founder of several companies and actually also some non-profit initiative, I think, Saul. So welcome. And I'm going to start by asking you a question about previous crises. You have seen many crises. So maybe can you tell us a little bit about difficult situations of founders through maybe the 97 crisis, 2001, 2007, so previous crises?
Now, obviously, the current corona virus is arguably a once in a century size crisis, just in terms of the magnitude at which it's sort of impacting the global economy. However, during my career, starting from I remember in '97 when the so-called Asian financial crisis happened, and big tech companies at the time like Oracle missed their quarter. Netscape, that was the first really internet company to go public, missed their quarter. And analysts at the time in '97 said there will never be another internet company that goes public. Now, here we sit 20 plus years later with obviously, hundreds and thousands of internet companies that have gone public, and a couple of companies that didn't even exist at that point, like Google and Facebook, being in the $500 billion or $1 trillion valuation range. So that was my first experience of a crisis. Also operated and invested through 9/11 and the so-called kind of dot-com crash. Operated and invested through 2008, 9, the financial crisis. I guess what I've seen is that just if you look at tech, at least, and if you look at where NASDAQ was in 95 and where NASDAQ is today, there is some roller coaster moments, and some of them are so steep that it feels like you're going to lose your stomach. But, the line from where we were to where we are is very much up and to the right. And then the other thing I would mention is that the crisis that we're currently navigating is very, very different from the financial crisis or the dot-com crisis. And there are 3 pieces of advice that we started giving to founders and CEOs like late February, early March, when the crisis started to unfold. 1, make cuts and make them now that are non-essential. 2, any non-essential cuts that you haven't already made, prepare to make them in Q2. And number 3 is understand your strategic universe, where you fit in it, and who you need to know and what you need to do to proceed. So in the startup world, where there is a 73% mortality rate from seed to Series A, crises are the norm. So, in our world, this is crisis and failure is a feature. It's not a bug. Whereas in most businesses, the idea of failure is not a feature. It's a death sentence. So you have to recognize that within our sector, even in a bull market, 73% of companies never make it from seed to Series A.
Totally. Now, another thing I would like to ask you about is the term sheets, because I remember in previous crises, some of the terms that are included in the term sheets are normally founders don't think about it too much, like anti-dilution, because it only happens if the valuations go down.
So, I think what we're seeing in this crisis, and, we were talking about it today, Monday is the day, as with most funds, we look at our deal flow pipeline. We had a company come in to present this afternoon for a new investment that we'd like to make. And, we were mentioning that, just like in every other crisis, for those of us who've been through them before, the best companies have no trouble raising money. And the best companies not only have no trouble raising money, but arguably are in a better position to dictate terms and valuation, because there is so much dry powder in the market and people were really focused on the best opportunities. Europe has an unprecedented amount of dry powder rather. So in the last 2 years, over 20 billion euros has been raised by European VCs. And by European VCs, I mean their headquarters is in Europe. The non-European funds are starting to set up offices in London or in Europe. So Lightspeed, which is a very, very good US fund from the West Coast, they've opened an office in London with a European partner. Sequoia, who are a fantastic fund, I think most people will know about, they plan to open a London office in autumn. General Catalyst, it's a Boston-based fund. They just raised a $2.3 billion fund. They've made several investments in Europe in the last 12 months. They plan to hire a partner in Europe. So, there's just an enormous amount of capital focused on the best opportunities.
This situation of planning, like as you were saying, zero revenues for the year, you have to adjust your cash flow and you are going to have to cut some expenses now, but more expenses coming in weeks and so on. Any piece of advice for these founders? Because probably, emotionally, this is a difficult, situation.
Yeah, look, you can't sugarcoat this. It's not easy. But quite frankly, again, people who want to be an entrepreneur, they know it's not easy. And if they didn't, they probably shouldn't have started. And if they didn't know before now, they know now. And now is the time either to sort of take the hard learnings, make the tough choices, or to quit and go do something else. And your responsibility as a CEO to all of your stakeholders is to, ensure the viability and the sustainability of the business for all of your stakeholders, and to do it in a way where you minimize the damage. But if you think there's going to be no damage at a time like this, it's just not realistic. So there are going to be tough calls that people need to make. It's never easy to do, but as I said, most founders are used to making those tough calls in normal times. This is also the time when people really figure out, is this something I want to do? And is this something I'm cut out to do? I always would say to people, there's a 10-year test that you need to make in a business. You need to wake up in the morning, look yourself in the mirror and say, do I want to do this for the next 10 years? And if you don't, you shouldn't be doing it.
I think it's very interesting what you were saying before about how you talk to the founders about these kind of 3 steps. I agree with you that there is a lot of money in the market, that I agree with you, and that the best founders always find money. Also that the best opportunities are made in crisis. So let's probably finish with this positive message. Thank you, Saul.
Thank you.